Banks are safe, right? That's what we've always been told. But here's the truth. Millionaires are moving their money out of traditional banks and quietly parking it in places that most people never think about. And no, it's not because they're paranoid. It's because they understand something critical about money that the average person doesn't. Keeping cash in the bank is actually making you poorer. In this video, I'll break down why the wealthy are ditching banks, what they're doing instead, and how you can apply the same principles, starting today. Most people believe that saving money equals safety. But let's talk numbers. The average savings account pays less than 1% interest. Meanwhile, inflation eats away at your money by 3 to 6% a year. That means your money in the bank is losing value every single day it just sits there. If you save $10,000 today, in 5 years it might only have the buying power of $8,500. You didn't lose it by spending. It lost value simply by being idle. Millionaires know this. That's why they don't park their money in banks. They put it to work. Wealthy people treat banks like tools, not vaults. They use checking accounts for paying bills, moving funds, and basic transactions. But for storing wealth, they go elsewhere because they want every dollar working for them, not collecting dust. As one billionaire put it, cash is the worst investment over time. Let's look at 7 assets millionaires use instead of banks to preserve and grow their money. 1. Real estate rental properties, land, and real estate investment trusts. Real estate generates income, appreciates over time, and comes with powerful tax benefits. 2. Precious metals. Gold and silver are time-tested stores of value, especially in uncertain economies. 3. Dividend stocks. These stocks pay regular income and tend to appreciate over time. It's one of the simplest ways to generate passive cash flow. 4. Private businesses. Millionaires often invest in small businesses or become silent partners in startups. It's high risk but offers high control and potential returns. 5. Farmland. Farmland produces income, grows in value, and isn't subject to the volatility of traditional markets. 6. Cryptocurrency. While volatile, crypto can serve as a hedge against inflation and a long-term store of value. The wealthy tend to allocate a small portion of their portfolio to it. 7. Collectibles and alternative assets. This includes art, watches, rare coins, and even wine. These are scarce, valuable, and often appreciate over time. These assets don't just sit, they work. While your bank might offer 1%, these alternatives can produce 5%, 10%, or even more in returns over time. Yes, some of these assets come with risk, but the rich don't fear risk, they manage it. They diversify across multiple asset classes. They use legal structures like trusts and LLCs to protect their wealth. They reinvest profits and allow compounding to do the heavy lifting. Wealth isn't about avoiding risk, it's about managing it smartly. You don't need millions to adopt these principles. Start small. Invest in fractional shares of dividend stocks. Use apps to buy into real estate or gold with as little as $10. Build your emergency fund, but don't leave excess cash sitting idle. The key is to shift from a saving mindset to a wealth-building mindset. That shift is what separates financial freedom from financial frustration. If this video gave you clarity or value, like and share it with someone who needs to hear it. And if you want weekly wisdom on how to protect your money and build lasting wealth, especially later in life, subscribe to The Wealthy Elder. It's never too late to get smart with your money.